Hello guys, welcome back to the channel. So I'd like to talk today about the whole GameStop situation, and I'd like to offer my 2 cents about it. I'm sure many of you know about the whole scandal involving the short squeeze on GameStop stock. But let's really analyze what's happened over the past week. Actually, more than the last week. The last week has kind of seen the culmination of this. It's all over the media around the world. There's this huge battle between Wall Street and average Joes, and right now it's not clear who's winning and where this will go. But let's see how it evolved over the past week. So let's look a bit here on Wikipedia. What is GameStop? GameStop is an American video game, consumer electronics, gaming merchandise retailer. So basically, it's your classic brick and mortar retailer, and basically a company that's been kind of slowly but surely going downhill over the past few years. And right now, it's in a what's called a stock market squeeze. How so? Well, because its business has been declining constantly over the years, recently Wall Street companies decided to step in. How so? You might think, oh, they would try and turn things around. They short sold the stock. What is short selling? Let's go back to Wiki here and let's find out what short selling is. So, being short in an asset means investing in such a way that the investor will profit if the value of the asset falls. This is opposite to a more conventional long position where the investor will profit if the value of the asset rises. There are a number of ways to achieve a short position. The most fundamental method is so-called physical short selling, which involves borrowing assets, often securities as shares or bonds, and selling them. The investor will later purchase the same number of the type of securities in order to return them to the lender. If the price falls in the meantime, the investor will have made a profit equal to the difference. So basically, you take a share, you borrow said share, and you basically hope that the price goes down and return it when the price goes down. The difference between the two is your profit. So if you buy with $10, if you short it when it's at $10 and return it later on when the stock has fallen to $5, you're going to make a $5 profit. Sounds easy, right? There's a catch, because you lose money if the price increases, and since the price can increase infinitely, your losses can also mount pretty fast. So, what has happened with GameStop? As I've said, some Wall Street hedge funds have shorted the stock. How so? Well, they bought these options that the price will, which will be profitable if the price goes down, but they overdid it. They went and shorted 120 to 140% of all available stock. So this means that they ended up shorting more stock than there is on available for GameStop in total. So this is where the internet comes in, and this funny little Reddit forum known as wallstreetbets comes in. Basically, it's basically a simple Reddit forum where people talk about investments and so on, and they've been very involved with GameStop recently. Because why? Well, someone had the time to go on the internet and take a look and see, whoa, hedge funds shorted 140% of the shares. This means that if the stock has an uptick, so the price increases, these hedge funds will need to buy as many shares as they can, right? Well, since there's only 100% of them available and they've shorted 140%, that difference means they're going to be squeezed into buying at higher and higher prices so that they can return the shares they've borrowed, right? Okay, sounds about legit so far. As this situation unfolded, it has become more and more popular. It's been popularized via Reddit itself and through the media, and it's reached a life of its own, and it exploded last week. How so? Last week, one of the major short sellers involved in this operation, Melvin Capital, they needed a capital injection from another company, Citadel. So Citadel and Point 72 have infused close to $3 billion into Melvin Capital to shore up its finance. Okay, this is interesting. But who is Citadel? Well, Citadel is one of the companies that's labeled as a market maker. They are a corporation that deals with the liquidity of the market, basically ensuring that the market stays solvent and that trades happen. So far, so good. Nothing nefarious, nothing difficult here. Well, let's take a closer look. On Thursday, basically, I think I have the title right here. What happened is that all of a sudden, companies, brokers, online brokers, no longer allowed the retail investors to buy GameStop shares. This has happened suddenly, and the one most obvious here was Robinhood. So Robinhood blocks new purchases of GameStop stock, the online trading application. Why did this happen? Well, there's two potential avenues for why this happened. One is because the market was so volatile, trading houses requested that traders have a capital to put up in case anything goes wrong. So normally this is fixed to 1 to 2% value of the security being traded. Well, now they increased this capital requirement to 100%. So basically, if you're buying a share, instead of paying the token 1 or 2%, you'd have to pay the full price. Okay, and maybe the guys at Robinhood didn't have this kind of capital available. But there's a twist here. The CEO of Robinhood, went online and claimed this is not the situation. Well, this opens the door to assumption number 2. You see, Robinhood has a different operating method than traditional trading houses. How so? Well, you see that if you sign up, it's free to use. You don't pay a commission when buying or selling stocks or other securities. So how does Robinhood make money? They make money through their main merchandise, which is you, the user. They sell user data. They sell your trades, your patterns, and everything to a variety of Wall Street companies, including market makers and, non-coincidentally, including Citadel, who happens to be their biggest customer. So in this equation, you have Citadel, who is backing Melvin Capital. They've just bailed them out financially with a significant investment. And they also have all of the data from Robinhood and similar apps concerning the buying patterns of retail investors. Retail investors who are the opposite side of Melvin in the GameStop short squeeze. And then, coincidentally or not, on Thursday, Robinhood and a slew of other traders blocked retail customers from purchasing GameStop stock, as well as a bunch of others. AMC, BlackBerry, and Nokia, I believe, were also included on this list. All of them very popular stocks on wallstreetbets, on Reddit. So many people have thought of this, myself included. Keep in mind this is just an opinion, that what has happened is Citadel pressured the traders into not allowing retail investors to buy more shares, thus driving the price of the stock down artificially, okay, because you're blocking demand for it. And this allowed Melvin Capital and the other funds involved in shorting the stock to basically recoup their losses, because if we go to Market Watch, we will see that looking at the 5-day trading price, whoops, on Thursday it cratered. So from 400, 300, it went all the way down to 100 something, 200, and it stayed that way for the duration of the day. And after hours trading and on Friday, this was 50% more expensive. So this means that the short sellers could now, on Thursday, they could recover their losses because the price was lower, and they could actually exit their short position at a much cheaper price. Or if they did a short on Thursday, the price cratered from 400 plus to 100, and they could make up some capital through those short bets placed on Thursday. And this is the core of the problem. This is what is totally wrong in this situation. And I'm very interested to see if there will be an investigation into this, because this has the markings of market collusion all over it. Okay, so you have on this side the potential of market manipulation at its finest. Again, this is an opinion, and there's a lot of people who have weighed in on this. Politically, in the US, it's been a bit of a storm, as people across all walks of life have pretty much weighed in on this, including Elon Musk, who tweeted several things about this, including the fact that he hates short selling with a passion. Let's remember that last year Tesla was short sold incredibly. Why is short selling a problem per se? Because it doesn't create real value in itself, right? It only creates profit for the short seller, who basically manipulates this form of stock trading for their own profit. In the extreme, short selling can actually be more of a self-fulfilling prophecy. It can actually drive the company into serious financial trouble, because as the stock goes lower and lower, they cannot use the stock market to finance the company. So they cannot put stock up as collateral to get a loan. They cannot emit new shares, because that will dilute the number of shares available on the market, further driving the price down, and this can be super problematic. But what really annoyed me is the way that the media portrayed the guys on the regular people on Wall Street bets, and who were placing buy orders into GameStop. So here we have a screenshot. Amateur investors, perhaps propelled by a mix of greed and boredom, are looking to teach Wall Street a lesson. This is so condescending. Propelled by a mix of greed and boredom. So the Wall Street guys did this out of the kindness of their heart. They did this for charity. It wasn't greed that caused them to short sell 140% of the stock. No. They're professionals. They know what they're doing. But the average Joe, or the average woman sitting at home trading this, they're the problem. Basically, the media has portrayed people on Wall Street bets every way you can look at it. They alt-right, extremists, and all sorts of other stuff. And I don't know if I mentioned the Discord already, but there's something else very odd that happened on Thursday. So Wall Street Bets has a Discord channel. On Thursday, it got shut down for hate speech. Okay, the guys at Discord say, oh no, this has been a claim for many, many months, but they so happen to choose to shut down the channel on Thursday. All signs point to something having happened on Thursday with serious implications on the market. Was it collusion? Was it market manipulation? I hope we'll find out. I hope there will be a legitimate inquiry into this, but at the same time, I don't think it will actually happen. There will be at most a token inquiry and some sort of, financial fines being attributed to these hedge funds, which will amount to a slap on the wrist, basically. Historically speaking, we've seen this happen in 2007, 2008, when big banks were bailed for very risky investments in the housing market. When those investments collapsed, threatened to take the economy down with them, they got huge bailouts, which then they used to pay huge bonuses. And basically, nobody was guilty for the years and years of hardship and the very long recession that followed, which kind of affected millions and millions of people around the planet. If you go to Wall Street Bets, you're going to see many people say that this is their moment to take something back for the hardship they endured back then. Okay? There's a social side to it as well, but let's keep focused on the fact that the market seems made for the big, powerful, rich players and pretty much stacked against the little guy. And this is disturbing. And another thing which amused me is, so when Wall Street does something stupid, they're like, oh, we need a bailout and stuff. But when normal investors do this to them, they're asking for regulation. When did they ask for more regulation exactly? Prior to now? I'm gonna bet never. Okay? I'm gonna keep following this. I'll probably do a couple of follow-up videos. We'll see how it goes, what actually happens. And I'm very interested to see if, again, there will be any sort of inquiry into this. And I'll keep you guys posted. So if you like the content, make sure to give me a like. Subscribe to the channel so you're up to date with my videos that I post. And thank you very much for watching, and I'll see you next time.